2019, and my name is Alejandro Zambrano, Chief Market Strategist with ATFX. We're going to take a look at the markets. Stock markets are down quite a bit. It doesn't look like, obviously, we did not get a deal at the end between US and China. And it looks like we're going to head into what we call maybe a little bit of a quiet period where I think the US is probably just going to wait for some sort of reaction from the US. And that's actually good for us because we don't want Trump to tweet. If he does tweet, he should just be very bullish or very hawkish and sort of just stick with that for a few months and then switch, not switching from one week to another, because that's when we get choppy markets. So it's looking okay from that perspective, some consistency in the markets. And if we just quickly take a look at what's driving the markets today or what's going on, it is stock markets and the Aussie dollar, which is really lower today. This is just a little list of watch list of markets to look at. So not too much of a change in the euro, GBP, or dollar yen, but in the Aussie we do have a bit of a move to the downside, and then it's quite clear in stock markets here with the S&P 500 being down with 1.25%, Nasdaq 1.53, Russell 1.38, and the German DAX at 1.72%. The U.S. government bond yield as well is down a bit, with 1.2%. So stock markets, that's where you're having your action, and currency markets, not too much action. But if you combine something like, for example, Aussie dollar yen, which we talked about last week and over the last few weeks, and then that's something because Australia, as you know, with their strong relationships with the Chinese economy, suffering, and as well people think they're going to cut rates in August. At the same time, the yen tends to strengthen a bit in market turmoil. So you have like that little play there. You can trade it via FX or stock markets. But if you look at the dollar itself, the dollar index, there's nothing happening here. So bear that in mind. And let's take a look. We'll begin with the euro. So let's begin with the boring bits. So the euro, there's not a lot of activity here. Again, it's sort of bit of a downtrend below 125. 112.65, and it may trade lower. But as I said last week, I think what's happening here is that this is being the euro is acting like a safe haven currency. It's a bit like the Japanese yen and the Swiss franc, so which tends to gain at time of market turmoil. So that could explain maybe why we're going upwards in this market. But again, technically, what I would do here is just ignore this market. But if you really want to trade it, then I would be bearish below 112.65, targeting these lows. Now we haven't been here since, what is it, like 13, 14 days. So it can take a bit longer, maybe in a week or two, to reach these levels. GBP versus the USD. So the market has a bit of a bullish bias. So it's a bit of a move to the upside. And, the market may potentially bottom out here above 129.65. Take this level out though, we'll probably drift lower with about 65 pip or so and touch this level down here. So that's something. Alternatively, just goes up to 131, which is what I think is going to happen as long as we're about 129.65. But if you look at this from a bigger picture, you can see that we're closely sort of trading in a sideways rectangle. Brexit news over the weekend, they're not really, they're mixed. There's nothing really interesting. Well, actually, there's some interesting things in UK politics, and it looks like Nigel Farage, Brexit party, if there would be a general election today, as far as I understand it, if I understood the actual report correctly, they would get like 34% of all votes, which is just obviously very strong. But that would be if there would be a vote today. So this people really want Brexit, and obviously Tories have not been able to deliver that. So again, if it would be a general election today, they would be most likely more weakened, and it's not looking that good. European elections are coming up later this month as well, and it's just going to give you a little bit of an indication of what may happen. But the winners in the European elections don't necessarily have to be the winners of a general election. I've seen that here. I've seen that in other countries as well. So I'm not sure it matters too much, but it still gives you a little bit of an indication. As for taking all that information, putting it into that chart, well, guys, don't expect anything anytime soon. This again is going to be a bit sluggish, bit bullish about 129.65. may go upwards to 131, but I think it's just gonna get crushed between these levels, and I think nothing is gonna happen. This is the price of the dollar versus the Japanese yen, and this you can potentially trade this without needing to go in euro yen, GBP yen, and Aussie dollar yen. If we have a break to 109.43, which is level just below last week's low, I think we can continue to go a little bit lower to the next level, which is 108.45, and also happens to be the target of this failed head and shoulders pattern. Aussie dollar versus the USD. Here's as well something one could potentially trade, like a plain vanilla bet versus forward. Big massive ascending triangle, take out the lows, could potentially open up for move to the downside. The only challenge though, we've been here before on May 6th. We traded down to new levels with not really getting any follow through, and then on May 9th the market tried again. So I don't want to get too excited here, but take out something like 109.53. So these levels could potentially open up for further declines. If we would reach a target of this ascending triangle, then the market can actually go down quite more. I think it should be down here at 66.57. When also, like in normal times, because the cutting rates should be fully normal. And if that indeed happens, you're looking at a risk-reward ratio of 5.23 times. Even if we don't go all the way down, I mean, if you just go, say, halfway or something like that, you're still looking at a 2.46 times risk-reward ratio. So this is good for longer-term traders like myself, people that like to hold positions, but also for people that just like scalping. It could potentially start trending nicely on a break to the downside. Let's move along here. This is gold prices. Gold prices are trading sideways between 1265.83 and 1291.33, with a bullish break lifting things to the upside, and then a bearish break taking things lower. Again here, very, very sluggish. Unfortunately, there's too much not activity, and I would ignore this if possible. Here are crude oil prices. They're swinging to the upside. So as you know, I've been saying that people are probably gonna try to sell here with stops up here, right? Since then, we have been able to reduce the stop loss once, or trend defining level, and the market sort of revisited these levels many times, and now we're up here again. Now again, I want to continue to be bearish below 63.04. Now things are not great necessarily from a geopolitical risk perspective. U.S. military, or the U.S. sent, I think, a big carrier ship to just outside the Persian Gulf, and is there, of course, to, I guess, ensure safety. But there's talks that could be the beginning of mounting an attack towards Iran, or maybe just trying to defend their interest. But the end point being there's some military conflict. Obviously, something I guess they want to avoid. The thing here, though, I don't think not too much is going to happen, but people are getting a little bit nervous about it. And if there is a military conflict, then that could potentially cause crude oil prices to take out 63.04. Now, I'm not an expert on geopolitical situation, but my guess is that Iran is going to be very, very careful not to provoke the U.S. Because of the difference in the military strength. I mean, I'm not an expert. I think it's quite clear that there can only be one winner here. So I don't think Iran is going to provoke the U.S. to do anything. So from that perspective, I think we're going to be all good. But we never know. And, headlines can drive the markets. So if we take out 63.04 on any news like that, we can probably trade to 65, maybe up to 66. And then we'll just take it from there and see what happens, I think. Next market is going to be the price of the S&P. So this is the S&P 500. And as you might remember, last week, I said if we swing back up to these levels around 28.67 or 28.76, I think traders are going to sell. And stops should go above 29.19.4. I think now we can reduce it to 2,902. So I think I would reduce it to this level. I think we can swing up, and if we do swing up, people will sell. but we can reduce now trend funding level. Let's see how far this goes. I think we could decline to 2,791, and I think if you just consider the news for a few moments and sort of realistically try to ask ourselves, are we gonna take out that high? Are we really gonna do that? Well, probably not, right? Not given in the light of today's news with the increase in tariffs and the likelihood of having more tariffs in place. It's only if they say, look, we're not going to do it, we're going to remove the tariffs, which would be a big step, that it could potentially sort of be interesting. But I think for now, this needs to go down. When we're down, if we're down at lower levels, maybe like 2,718 or potentially lower down here at 2,629, I think at these levels we can start to say, okay, maybe the market sort of declined a bit too much, especially if US data continues to be strong. If it continues to be strong over the next 6 months, then that could be, or that's sort of the plan we can work with. As for the DAX is in that buy zone, and I think, as I've been saying lately here, probably need to wait a bit, especially if the S&P 500 and all these markets trade much lower, which I think they could do. The new trend defining level for short-term trades is 12,234.6, and below this level, this market can decline. It is possible though to buy. If you really think the S&P is going to bounce, you could probably buy here, which is a level I showed when we were trading up here in May, beginning of May. But my personal opinion is that we're gonna trade deeper, maybe down to 11,900 and 592.7. My technical analysis though says that we should probably bounce here, but there's sometimes when you sort of need to look at the analysis for case for the S&P and the Nasdaq 100. You just need to read the news and then sort of have that overriding the technical analysis for the other markets overriding what's happening here, and that's what I would do. Okay, do you guys have any questions? Let's see if you have as well. Good morning to you guys. I'm not sure if I said that. So we have Nikos, John Mitchell, hi, Marvin in the chat here as well. So hi is asking about the Turkish lira. If we can take a look at that, and Marvin is asking about the yen crosses. Yeah, let's take a look at one of the yen crosses as well. I know most of you guys are not London based, but if you are London based, then we're hosting an event with ATFX at ATFX offices. So let me see here. So with Eventbrite, you can find a page. I'll send you that link. It's not me on the picture, but yeah. So we're doing an event, and it's gonna be on May 22nd between 6:30 p.m. and 8:30 p.m. So it's gonna be sort of masterclass or seminar about 2 hours long. We're gonna talk about the markets. We're gonna introduce you guys to about 5 different tips on how to improve trading and technical analysis. So if you are in the area, don't forget to register, and then you can come and meet me. There's just spaces for 10 people, so not everybody's gonna be able to join the first time around. I think they already had a few people, but they haven't been able to get reach of everyone. So there's still a possibility to sign up and join me for this first session on May 22nd. Again, the only thing you need to do is register, and David Berg, which I work with here, and he manages the London desk or the English speaking desk, he will reach out to you. David Berg is a great guy. He used to be working for eToro before joining us here at ATFX. So if you want to know more about this, check out the link I just sent to you guys. And as well, if you have any questions, just ping me. You can reach out via Twitter if you want to at AlexFX00. You can also just send me an email to Alejandro Zambrano at ATFX.com. But what you want to do anyway, even if you reach out to those channels, you need to register. So please do that. Okay, so we got a few questions about the Turkish lira and the yen crosses. So let's take a look at the dollar Turkish lira then. Okay, so this is the dollar Turkish lira, and it's a daily chart. And just looking at this, there's nothing too much constructive to work with here. The only thing we can see is that the market, if you look at it from a weekly chart, it sort of resumed this bull trend. And a few weeks ago, the market was, within this range, and maybe like a bullish breakout. Let me see here if I can add a line to it. Like a bullish breakout like that would have been interesting. That would have suggested maybe a 10% move, where we reached that level already. If you look at this from a daily chart, this is what you have to work with. Now, this is still a bullish trend, and I still think we can go upwards. It was quite some time ago I sort of did an update on the macro fundamental drivers of Turkey, but I still think it's just a general issue with trust in the leadership over there. I think that's just a big issue, and I think the market would like to see more sort of Western style of democracy before turning really bullish and hawkish. I think that's just really what they're looking for. Less control, really, of the institutions. And until that gets sorted, I don't. Obviously, you can turn things around. There's countries that are doing really well, despite not being driven on the back of sort of Western democracies, but it's not an exporting oil country, Turkey, right? So they don't have some natural resources that can help them bring a lot of wealth. And I think from that perspective, it's still going to be a challenge here. And I'm guessing from a purely technical point of view, I think the market could probably still trade upwards, but you need to be very careful where to buy. Again, we don't have a very nice pattern to work with, but you have a low down here, and then you have another low down here around 541. And I think here, maybe if we have a 50% pullback or so to something like 577, I think from that level, one can potentially start to contemplate bullish positions to target that high and then potentially upwards. It might be, of course, that it's just going to go straight up. But as always, the risk-reward ratio is extremely important when it comes down to trading. And you'll find that being better around 577. And between 577 and 548, I think this market could potentially bottom out here. As for the yen crosses, I'm not going to cover all of them, but I can cover maybe the Aussie dollar yen, which is probably the more interesting today. So this is the Aussie dollar versus the Japanese yen, and the market was trading within this rectangle. It did try to break upwards here in April, but finally traded lower on the back of those news. You see what's happening here is that stock markets were going up and up and up and up. Everybody was super excited, and it was more of a case that maybe the yen needs to catch up, or Aussie dollar yen needs to catch up with US stock markets. But that did not work out, and stock markets actually peaked. And since then, we had the issues with trade wars driving price to the downside. Now, trading this today, I still think we can go lower. If one shorted here around 77.38, I think it's perfectly fine to put stop loss orders just at that breakup point. And then in the short term here, I think it is fair to assume that if we go up, so if we correct maybe up to something like 76.90 or so, so if we move up to these levels, I do think people will try to short sell here and target 76, 75, 76, yeah, 76, and then sort of taking it in different steps to the downside. But we're clearly dealing with a downtrend. So I think if we swing up, people will short sell. I think you might even see a little break to the downside here, and we can potentially trade lower. So on break to 76.31. So take this out as well. We can go lower, but if you have your scalping strategy, you know what you're doing, you want to get involved, then this is probably where you could focus on. Okay, I think we covered most of the markets. So we're gonna wrap things up. Guys, thanks so much for watching. Don't forget to hit that like button. We have 14 people watching, but just 3 likes. It's very straightforward. Sign in, you can ask questions, and then you hit that like button there. It's very, very straightforward. That would do a lot to help this presentation. We need to get more people in here, more activity. These presentations are brought to you by ATFX, and yeah, we need to see higher numbers. No pressure there, but help us with that. That would be amazing. So if you like it, you click on the like button. If you don't like it, just click on the dislike. I'm very straightforward with that, but if you are watching it, then don't forget to hit that like button. It's really important that you support us if you like it. Okay, guys, thanks so much for watching. And again, if you're in London on May 22nd, let me know. As well, if you are contemplating to open up or looking to move away from a broker, you think they're too expensive, you think they're unfair, too much slippage, wherever it may be, don't forget that ATFX does offer some really good spreads. Go on to trading and then retail edge account. The same sort of spreads you get here. If you go to big brokers that I used to work for, you need to put £25,000 to get that. Not only that, for people that open up an edge account or a professional account, you get access to coaching with myself. Very straightforward. It's just one-to-one. I'll listen to your questions and what you want to accomplish with your trading, and I'll try to help you formulate some sort of a plan, try to guide you in the right direction to help you become better in your trading. So there's 2 sessions, 30-minute each. The first one is just to sort of figure out what you want to accomplish. And if you already have a strategy, we can just talk about that directly. If you don't have a strategy, again, it's just to get to know you guys, and then we'll do a follow-up like a week or 2 later, where I have had time to sort of figure out what could be interesting for you. I present you the results, and as well, I talk you through the results. So it's something to help you get going. Not a lot of brokers do this at all, and this is something new that we introduced here at ATFX. Okay, guys, have a beautiful day, and I'll see you guys tomorrow, same time here at ATFX UK. Thank you, and bye-bye.